Hi everyone, welcome to this live event. As usual, I'm here with Yohay Elam from Forex Crunch and Mauricio Carrillo from FXStreet, and we are here to cover live, the last release of the US GDP figures for the second quarter. Usually, it's not a quite relevant report because we have two previous readings from the same number, so we are not expecting much changes in here. But anyway, it's an interesting event to cover, and we have plenty of US data alongside, so hoping we are having some action now, okay? Hi guys, how are you?
Hi Valeria, doing great. Glad to be here on the show again.
Yeah.
Hi Valeria, doing well too. Being ready to read and comment all of the comments and questions from the audience from our chat. So what we can expect today from the GDP, Yohay?
Expectations are for a small upgrade. Growth has been poor in the United States in the past three quarters, Q4 2015, Q1 2016, and Q2 2016. According to the second release, it was 1.1 annualized growth. Remember, it's annualized, so that means quarter over quarter, it's just something like 0.3. This time we're expecting a small upgrade to 1.3, still weak growth. Of course, the Federal Reserve and economists expect growth to jump in Q3 and also in Q4. But all in all, we're in a world of the new normal, new mediocre, around 2% growth year over year.
Yeah.
Okay, thank you. So another question is, what is going on in the market right now? I just read like a OPEC, well, not OPEC, but oil agreement from Saudi Arabia or some.
Yeah, well,
there is any news there?
There were some informal talking between OPEC and non-OPEC oil producers worldwide. They tried to balance a bit the market to deal with this lower prices. And against all odds, seems the OPEC group, particularly not including non-OPEC countries, have reached some sort of agreement yesterday to limit production. Of course, as I said earlier, it was an informal talk, okay? So they have not made any huge announcement, although the market is saying that they will limit oil production around 32, 33 billion barrels per day, and that will create a committee to set up which country will do what and so on. And then when they have their formal meeting next November, we will get the real deal, sort of speaking, and the details of this deal. Anyway, that was enough to boost oil prices late Wednesday, right? And it also helped stocks to recover ground because we started the week with a sense of risk aversion, right? The stocks falling, market was in a bit of bad mood. It has started to improve on Tuesday when the US released a huge positive consumer confidence number, but this oil announcement helped to build up that confidence. So we are having some risk appetite going on in the market, particularly among stocks and commodities. The European currencies are dead and seem that nothing can take them out of those letargs. Don't laugh on me, guys, it's true. I was watching the euro-dollar weekly chart, right? I will enlarge it a lot, but there it is. We have been 1, 2, 3, 4. This is the fifth week in a row that the pair has been trading 100 pips, 150, and in this particular one, the range even shrunk farther, and we're having a weekly doji. So really, I guess that the fact that central banks are holding on, right, maintaining the status quo, not offering nothing new, has left traders around the euro-dollar pair with clueless. They have no idea how to trade a pair now, what to do with it. Everything was about the ECB and the Fed, and none of them are doing much. So here we are, nothing going on in here.
Yeah. Usually these are followed by closure. I mean, that's what the textbook says, that after a long period of tight range trading, we should see a big move to the upside or to the downside.
Yeah.
But we're still waiting.
Yeah. That big move came tomorrow or in 2020, right? We don't know when. It will come, of course. If we are alive to see it, it will be great.
Yeah. Our listeners can hear some frustration.
Well, I would say there are a lot of more interesting pairs to trade. The Aussie is the one. The dollar Japanese yen is getting interesting also these days. Although this week, as I said, I don't believe European currencies had much to offer, right?
No. But yeah, it's the risk on atmosphere is seen also in the yen. The yen is weakening, less demand for the safe haven.
Yeah.
So yen crosses such as Aussie against the yen, Kiwi against the yen, Canadian dollar against the yen are certainly reacting to that OPEC decision, agreement, handshake. I'm skeptical that they will actually reach a very significant deal because it's only intentions to reach a deal on November. As you said, it's informal. And Russia is not in the game at the moment, and Iraq isn't in full agreement. So I remain a bit skeptical, but for now, they managed to agree on something which didn't happen for a very long time. So yeah, oil prices are certainly reacting, and currencies as well.
And for the dollar Japanese yen rising and the Japanese yen weakening, the dominant trend in here is quite bearish. So it will take a long ride to call bullish this particular pair. But we're talking about short term, right? So that's just to make a point to the audience.
Yeah.
But yeah, commodity-related currencies against the yen are probably the best choice today.
The Aussie is just testing. Let me check. Just testing that zone, It's like a downtrend here. Wait, uptrend resistance could be a really interesting point to if they get stronger and can break that level. Don't you think, Valeria? Or are you that bearish?
It has been consolidating gains lately in the longer view, after topping this year around 78.30, pullback held in here 74.50, which is for me like a line in the sand because it's the 38.2% retracement of the early year rally. I'm watching, and what I'm seeing, in daily charts is that we have lower highs, on bounces and lower lows also on declines. So I'm not just too comfortable about a bullish breakout in here, although some follow through about 77.40 probably a trick and send us back at least towards that 78.30 region, which is this year high.
Okay, we are 15 minutes to go. Let's talk about the US elections. What do you think, guys, from the first debate in the United States? Trump versus Hillary. What do you think, Yohay?
Well, it seems that according to the polls that came out immediately after the debate, that Hillary Clinton won the debate. It was a victory in points and not a knockout. They always like to take these metaphors from the boxing world. And she was better, but he didn't collapse. Anyway, I think it comes at a time where the pendulum swung quite a bit towards Trump's direction. He managed to reach a tie in the polls with Clinton on the voting intentions. And now I believe we'll see the pendulum swing some kind of mean reversion back to a lead of Clinton, not by 8 points like in mid-August, but something like around 3-4 points. To see the full reaction from the debate, I think we'll have fresh polls from today, post-debate polls, not only on how the debate went, but what are the voting intentions, and more polls during the weekend. And so I think that for markets, it's also a small positive. I mean, there's a lot of time until the elections, but with anti-trade Trump and basically wildcard, we don't know what he's going to do against mainstream Hillary Clinton markets that usually prefer Republicans this time prefer. So it also contributes a bit to the risk on atmosphere. immediate reaction on currencies was a slightly weaker yen and a rise in the Mexican peso. So maybe the markets think that there will be no wall between the US and Mexico right now.
Yeah.
So we'll have to see again the full polls after the debate, but it seems that she won the debate according to at least most analysts.
I think that she won the debate, but it's not enough to change the odds. I think Donald Trump is a rising force, and Hillary Clinton, is the perfect candidate. And but people don't like that a perfect person. They like the romantic history and nobody coming up and winning from the back. It's a complicated thing for Hillary Clinton.
Yeah, and some people want change, and Clinton is the incumbent. Everybody knows who she is, and she's coming off 2 terms of Obama, and Trump is very colorful and special. Let's put it this way.
That's right. What do you see in the market according the debate or the outcome of the debate, Valeria?
I'm not sure. The market is seeing Hillary Clinton as stability and Donald Trump as a wild card. But I do believe that it's still risky to take those extreme postures. The fact is that we don't know how the market will react, whoever will win, and we don't know which policies will implement. I do believe that, of course, the most risky or the one that is less forecastable is Trump, no doubts. But the market is happy, cheering Hillary's small victory in the debate. Of course, that's adding to the bullish case of stocks, as Yohay said. But it's a long way to go until November, I do believe. So, and we have a couple more debates ahead, right? So let's see how things go on from here. It's a bit too early to think that they may influence the market right now, right? Of course, the elections will be other thing, and after the next debates will also be more stronger what we will see in the markets, the reaction of the market. But for now, not much.
By the way, we're having a special coverage tomorrow, a special webinar tomorrow about the U.S. elections, about the U.S. electoral system that Marshall Greer will present. I just typed the link in the chat. If you have the chance, just get there and register, and you will get also the recording of the webinar. Sorry for the interruption and for the advertising, guys.
Okay.
But this is complicated in the bipartisan system in the United States that the others, like Johnson, I guess, they don't have any opportunity, right, Yohay?
Yeah, it's the same with the British system. I mean, it's relatively similar, and I must say in my country, in Israel, it's totally proportional. You can, almost any party can enter parliament, and then you have 12 parties in the parliament. So it's different kind of mess, but it's everybody's sort of represented. So in the United States, it's very hard for third-party candidates to make it. You see here, according to what I'm showing now on the chart, Gary Johnson has support of around 7.7%, which is quite a bit, and he didn't get to sit even on the debate to get his voice heard, for example. I think it's a shame, but anyway, that's how the system works.
I am watching your screen, and if you go up, you will see the map, the United States map. Your map is showing like Florida, like a red state, but if I share my, let me check here, mine, it's like a blue one, like a Democrat. So it's interesting, it's like a real-time updated. No, I think the battleground is there is a battleground state, Florida, and I am right now in Florida, and there is a lot of Trumps. Well, not a lot, not lots, but a quite significant number of advertising from Trump, but I don't see any Hillary's, banner over there. Well, someday I watch one, but not that like I see like with Trump. Anyway, so let's switch. Oh, sorry, Yohay, what do you want to say?
No, I just also refreshed my screen, and now I also have Florida in the blue column. But as you can see from the colors, they're both very light colors. That means that it's very. Florida is one of those swing states that will make the difference. 50.1 chance for Clinton, 49.9 for Trump, according to. So it doesn't get closer than this.
Too close to call, I guess. Okay, so let's switch to the economy. So right now we will have the US GDP, but what we can expect in terms how the United States is doing in terms of economy. I know that you say that the new mediocre, but the new standard is the, what do you think about that? What do you say?
Me?
Well, 2% growth, more or less 2.5%. At least it's going on for a long time, since 2009. So we have 7 years of low growth. Job market is advancing quite nicely. That's positive. But wages are still stuck. I mean, people are making less money. That's one of the reasons that Trump gets support. Recent figures have been mixed. Consumer confidence that Valeria mentioned has been really great, the best in 9 years. But durable goods orders have been mixed. Retail sales, the last report wasn't that good. So, yeah, the U.S. economy continues growing, but it's still at a very slow pace. And I don't know, maybe in this kind of situation, we will not get a bubble. We will not get a big bust afterwards. But it's, of course, very frustrating as well, because many companies and people want to see stronger growth.
Yeah, and what do you think, Valeria?
About the U.S. economy?
Yeah.
Well, it's as Johan said, it's going slowly. Everything's going slowly around the world. So, yes, that's one of the reasons that we're not seeing much action across the Forex board. But it's for me, it's still the economy that's performing the best. Compared to Europe or to the UK with now the Brexit, or compared to Japan, where things are not doing so well. Maybe Australia is doing better, but still every economy is doing bad. So in that mediocre scenario, as you have described it perfectly, probably the U.S. economy is the one doing a bit better, right? But still, it's not enough. Not enough to outstand over other economies. Not enough to give the greenback strength. Not enough to rise rates according to Yellen. So here we are. It's wait. Furthermore, yesterday the fact that durable good orders came in flat, showing not much progress in there, generated a lot of market talks about a downgrade in the third quarter GDP, right? So since the situation will extend into time, okay, not that we are going to get any better than during this last 3 months or the upcoming 3. So that's pretty much, I guess the word it's deflated.
Okay, get back to charts. So what is the strongest and the weakest currency right now, Valeria?
There's not much of the strongest, but the weakest seems to be the yen. Maybe we can mention commodity-related currencies as the strongest. Aussie CAD better, and there I stop my view. I don't see the pound being stronger, not weaker at this point. Meaning it's weak, but it's trying to correct some, and there we are struggling 130, not able to recover above it. So for me, the pound's still weak despite the ongoing upward corrective move.
And what about the gold?
Gold right now it's a bit weaker. I do guess, but because the market is in winning positions in the safe haven asset, I'm looking for uh, stocks right now, but nothing really much going on in here. We have been basing around 1300 and lower highs, right? Not really able to push it higher. But I remember having talked about this a lot. Maybe we can go up to 14 somehow, but it's like a comfort zone. We have reached comfort zone in here. We are here to stay. It will continue trading probably in Federal Reserve's decisions, meaning if the Fed somehow decides to raise its rate in December, as we are wishing, it will probably plummet. But in the meantime, it will remain in a wait-and-see mode, slightly higher, but not much.
Didi is asking in the chat about the dollar Swiss franc. If you have a take, a view in the Swiss franc, Valeria.
Honestly, not much. I do believe that the franc is a bit strong at this point, but it has been flat for all of the week, mostly as the euro. So not seeing much going on in here, and I don't like it much ever since the intervention last year. So not following it too much. But what I'm seeing also in the euro and not only in the Swiss francs is that we have all moving averages pretty much horizontal in 40, 50 pips range. That's clear indication that, and I'm talking, this is the 20 moving average and this is the 200 moving average, right? And they are both horizontal, both in a 10 pips range and heading nowhere. So that's a clear signal that there's no trend, nothing going on in here. So I won't take a position until I see a more clear directional strength. Same goes for the euro.
In your opinion, Yohay, what are the levels to see in the franc?
I'll join Valeria saying, don't see too much going on here. Most of the time it's a proxy of, well, it's mostly US dollar strength or weakness, but it's prone to intervention by the S&B. Can find some levels here, but remember that these levels can be easily broken. So I would say 96.60 sort of was touched a few times, so that's strong support and resistance. Strong resistance 98.20. So these perhaps are interesting levels to watch. But again, the Swiss National Bank can intervene at any moment, intervening to weaken the Swiss franc on Euro Swiss, making all the levels here on dollar Swiss a bit irrelevant. So not one of my favorite pairs.
Okay, thank you. Yohay, so we are 2 minutes to go. Yeah, the expectation for the GDP is revision to the higher, right? 1.3.
Yes. And we also get jobless claims expected to stand at 260. Sorry, last time they were 252. Also very, very stable weekly indicator, which has been quite good in the past few months.
Okay. Thank you. So 1 minute to go. Let's see what's going on here.
Yeah, we'll need a very big surprise to move euro dollar.
Yeah.
But maybe on dollar yen we'll have something.
Yeah, if the number is positive. The numbers are positive.
$1.4, better than expected.
Yeah, a bit, just a bit.
And initial jobless claims, better than expected too.
Mm-hmm.
Okay. Let's see the reaction, if any.
Unemployment claims also came out better than expected, to 54 against 260.
And also the previous week was revised down
Yeah, 251.
Yeah.
Trade balance also good. Lower deficit, 58 billions deficit. Ah, a coin.
US dollar is strengthening just a bit. I see something like 15 pips on dollar yen. So we can't say there's no reaction. All good news from the US.
Slightly positive reaction.
Yeah.
So, okay, not a big deal. Well, we all know that this will be a quiet day, not that relevant report because it's the last revision. But it was a nice surprise.
Yeah, it's I think that
Stocks are down. Sorry, Yohay.
we're getting close to the end of the week, month, and quarter. So I guess tomorrow we'll have more action with end of month, end of quarter flows, which could make hopefully for some last minute adjustments that will make a bit of volatility.
Yeah. Okay, Valeria, what do you expect from now onwards? I know that this is a tricky question, but
You want me to be honest? Actually, not much. What I'm seeing is that gold is not happy with the news, aiming to break the fresh weekly lows, which can help the greenback advance a bit more. If the greenback has to move against something, I would probably go with the pound or the dollar yen because seem to be the weaker currencies right now. Pound is finding some short-term buying around 29.80, so maybe a break below that level could push it lower towards 29.30 or so. The dollar Japanese yen maybe it can advance up to 102, particularly if the dollar remains strong. The euro, I'm not seeing much going on in there. Probably we can go down to 1160, but not seeing much below that level right now. The OC, it's having a battle between strong stocks and weak uh, gold. If gold and stocks align, both go lower or both go higher, then the OC will have a more reliable trigger, you know?
There's a rate decision in Australia, and it's the first one by the new governor, Philip Lowe, and it'll be interesting to see if he changes some things. Probably not. He's been with the RBA. I mean, his previous job was also at the RBA. He's not doesn't land from the moon or anything, but in his first speech, he talked about that they're not going to go nuts after inflation. So among the components, we have a small dot.
sorry,
4 point. Sorry?
I lost you for a second, but you can go. Yohay?
Looking a bit at the components of the GDP. So there aren't many changes, but personal consumption is down from 4.4 to 4.3% annualized. GDP price index, core PCE, deflator, they were left unchanged. Exports are a bit stronger, 1.8 instead of 1.2, and imports 0.2 instead of 0.3. I don't see big changes.
Okay. The stocks has a slightly recovery, but
Not much going on.
mm-hmm.
Yeah, I think dollar yen has a nice move. Well, 20 pips or so. And the rest are, I see, smaller moves.
So tomorrow, do you expect any rebalancing? Because it's the last day of the quarter, Yohay. That's what you told us before.
Yeah, but this isn't always we don't always see things moving in one specific direction. Just some last-minute movements. I would look out especially for around the time of the London fix. It's 3 GMT, 3 p.m. GMT. So that's when we see some last-minute adjustments. So that could be interesting. In terms of bigger spikes, more volatility, but I don't know if we'll have a specific direction. I think that one of the big banks, maybe Barclays, they released their assessment for the end-of-month swings, if they expect more dollar strength, more dollar weakness. So we might try to follow that, but I'm not sure that their estimations are that correct. I can say we can expect more volatility, but I don't know which direction things will go.
We have the final revision of the UK GDP tomorrow.
Yeah.
That could bring some action, but not much more than that.
Well, Sept, Canadian GDP tomorrow, so if you're trading the Canadian dollar, should be a market mover.
Okay.
Well, also Japan CPI, Japan inflation in the night. Okay, so the GDP has been revised up, but there is not a good indicator that the United States economy is going any better. It's just the new, the new standard, the new mediocre. Like Yohay. Say what we can expect for next week on non-farm payrolls. Yeah, Yohay. Yeah.
I checked the numbers, but I'm not sure what market is expecting. Sorry, it's ahead of this coverage. But to be honest, as I believe that we discussed this plenty of times, employment is doing good in the US. Employment is not the issue. The issue is inflation. So a good rating is not going to do much for the greenback. Payrolls are not what they used to be. I guess if the headlines are pretty much in line with expectations, attention will quickly flip towards earnings, wage, because that's the closer inflation number we have within the payroll. You know what I mean? So that's pretty much what I'm looking for. The only hopes the greenback has with payrolls is a strong increase in wage and, of course, a positive headline, right? But that's what I will be looking for there. That's what the market will be looking for in the payroll report next week.
Yeah, there are expectations for a rate hike in December after the last Fed decision. So, and I think the bar is a bit lower. So I think in the headline figure, 150 or higher will be good enough. But as you said, Valeria, the wages, which disappointed last time, dropped to an annual pace of 2.4. they will need to, I think, rise back to 2.5 or higher in order to be also good enough. But again, as you said, there's so much time until December. Nothing is expected in November, a few days before the election.
Yeah, the elections in the middle.
Yeah.
Okay, guys, what do you think to do a wrap up, explaining what happened today, if anything happened, and what we can expect for tomorrow in the rebalancing and in the end of the quarter, and what we can expect for the next week, if you have any opinion on that.
Well,
okay, Valeria, go ahead.
The dollar is greening higher ahead of Wall Street opening after a release of relatively positive data, which anyway is not enough to force us to pull the trigger towards a stronger greenback. Most European mayors continue trading range bound. We have strength going on in commodity currencies and weakness in the yen, but that's not because of US data, but of oil recovery. The stocks have pair gains. The strong confidence we have seen over the past 2 or 3 sessions seems to be fading. I guess we will need to wait for Wall Street opening to see if they recover their shine. But anyway, the market is looking for a trigger and can't find it. That's pretty much what's going on, and what will keep on going on. We have been focused too long in central banks, and central banks are these days offering nothing, and will probably keep on offering nothing for the next 2 months. So we are a bit lost. That's what's going on. Market is lost, right? Because they don't have their guidance. So what to expect for today? More range trading, not seeing any huge breakout unless we have a shocking out of calendar new, which of course no one is expecting. And that's how the week will end. I'm not expecting much of rebalancing coming on in the end of the quarter tomorrow. Yes, the market has this uncertainty will persist. Maybe we see some profit taking somewhere. I'm particularly thinking of a dollar Japanese yen or probably a Canadian dollar, which have strengthened a bit, but that's the most I can see right now.
Okay, thank you. Valeria, I have a question for you. What is in your opinion, what is the strongest currencies and the weakest currencies right now after the GDP or indeed American market, and why?
I still believe that, as I said, that the dollar is not strong enough, and I still believe that the commodity-related currencies are the strongest.
Okay, thank you very much, Valeria. What do you think, Yohay, what happened today and what will happen in the days to come?
Well, we had the figures coming out slightly better than expected, nothing earth-shattering, but good enough, 1.4 on GDP. Also, jobless claims came out better than expected, once again, 254. We are seeing relatively neat rise in dollar-yen, 30-something pips at the moment, so it's not too bad. For me, this kind of reaction is sort of better than expected. Euro-dollar is still very much stuck in range. Headlines from OPEC will continue dominating. I think eventually people will be poking holes in this decision and saying it's not too much of a big deal. So I expect oil prices to slide a bit. Tomorrow we have the core PCE price index also from the US, the Fed favorite, but it has hardly moved. So it's more about end of month, end of quarter flows, which will probably contribute to higher volatility. Next week, we have the full build-up to the NFP. Among the figures I will watch out, especially for the ISM non-manufacturing PMI, the service sector figure, because last time it fell to the lowest level since 2010. So this time, I expect it, there will be lots of focus on that. If it falls even lower, under 50 points, it'll be really bad for the US dollar. If it rises, it's good news. And of course, the non-farm payrolls at the end of the week, headline, the bar is low, 150,000 or higher, no need for 200. On wages, we need an improvement to support the US dollar.
Okay, thank you, Yohay, for your opinion. And guys, it has been a pleasure to be with you again.
Same here.
Pleasure.
Yeah, and see you in the BOE, no, in the ECB, I think, in September.
Yeah.
In October 20, I guess.
Okay.
Okay,
Yeah.
so, okay, guys, see you next time. See you, Valeria, on Tuesday, and see you, Yohay, in the next week on your videos. It has been a pleasure. Okay, guys, so I just want to share with you guys, there is tomorrow we'll have a special webinar about the U.S. election, understanding the U.S. election process and the election significance for the Forex market. So I'm just typing the link in the chat. If you have time, just subscribe like I am doing right now. It's easy. Well, let me put here. Yeah, just subscribe here and you will be ready to assist to the session, and you will get the recording too and the reminder. Okay, guys, it has been a pleasure. Valeria and Yohay, see you next time.
Thank you very much.
Bye-bye, guys.
Right now, in 10 minutes, we will have the Dr. Shivaraman with his review of the process, the review of his calls, and after that, Phil Carr will be with us explaining gold and silver markets and also the implication of the GDP on the gold. Thank you. Bye-bye. Good hand.
Okay. Ciao.
See you.
Bye.